Rajiv Anand, the MD and CEO of IndusInd Bank, to get us their view on how the bank's book was impacted. Because, among the gems and jewelry lenders, IndusInd is one that has a little more sizable portfolio perhaps than some of the rest. Mr. Anand, why don't you start by telling us that? I mean, about 3% of your book is gems and jewelry. But, overall, if you look at how much of the book is exposed, to US exports from the MSME side, and the gems and jewelry book, how large it was, and given the impact of the tariffs, and we're seeing numbers of how the exports have come down, what was the flow through you saw in the bank's asset quality, disbursement trends?
Thank you for having me, Ritu. I think broadly speaking, the numbers that you had of about 3% of our book is in the gems and jewelries business. Like rightly said, the headwinds in that sector have been quite strong over the last 12 to 18 months. Really, one is the whole tariff issue on one side, and the fact that really post-COVID, buying from the Chinese had significantly come off as well, and so therefore to that extent, given the fact that we deal pretty much with the largest players in this space, we don't have a SMA 1 or 2 at this point in time. But it's a given the fact that the business itself has been relatively muted, the book has not really grown over the last year or so.
So about 9,500 crore, 3% of your book, would that be the total number? And what about the other MSME book that has exposure to the US markets?
Yeah, I think if you look at the MSME, we've actually done some work around tariffs. Before all this, in terms of to see whether there was any impact on any of our customers, and we found that the risk that we were running on the MSME portfolio as a result of tariffs was relatively muted, and I think we've seen various players having multiple strategies, looking at diversification of their buyer base and so on and so forth, but obviously all those headwinds will now turn positive, given the fact that we're moving from 50 to 18, while the gems and jewelries industry is waiting to see some of the fine print at this point in time. I think clearly both the EU transaction as well as a reduction in the US tariffs is certainly very positive for the gems and jewelries industry. This is not just positive for gems, but for diamonds as well, because lab-grown diamonds is a big market in the US, and that should have a positive impact for some of our customers as well.
Just to clarify, Mr. Anand, none of these accounts had even slipped in the SMA part of your book, and had you at all increased your provisions given the tariff threat, and does that now come back down? And going ahead, what kind of a disbursement growth do you see in this book now that that tariff uncertainty seems to be behind, at least for now?
Like I said, there is no SMA 1 or 2, so the question of provisioning doesn't arise. I think it's still early days. I think market participants themselves are trying to assess, looking at the fine print as far as the whole tariff issue is concerned. But I think it's fair to say that the industry should look much better, from here, both because of the EU transaction as well as what we've seen on the Indo-US trade is concerned, and therefore, if the underlying industry does well, I think we should see some growth in this book. Too early to call, how much that will be.
Mr. Anand, in that case, now that all of these things are, at least for now, appearing to be falling into place, would you look at growing this book, since you mentioned that the book has remained flat? Although there have been no SMA 1 or 2 assets, but there hasn't been any growth either. Would you be looking to grow this book right now, or would you wait and watch for a couple of more quarters to see how things unfold and then take a call on what needs to be done?
These are relationships that the bank has run for decades, and so therefore, to that extent, we will partner with our clients, and we will have to assess the situation through conversations with them, and we will assess how much we want to grow going forward based on those conversations. Too early to call, I think.
Okay, too early to call how much the book will grow, but no stress flowing in there. Mr. Anand, quickly, since we have you here, there's been a bit of an organizational restructuring, streamlining, at the leadership level. We've seen quite a few new appointments, including a new chairman. There's been reports in the market from Piramal Finance. We've seen a few top-level exits. Are they heading the IndusInd Bank way? And, how many more new appointments should we expect in the coming quarters?
Ritu, we have a regulatory obligation which we take very seriously. Wherever and whenever senior people have joined us, we have made the statutory obligations, statutory disclosures to the stock exchanges, etc. As soon as and therefore we will continue to do so as new people join the organization.
Any plans on raising further capital, Mr. Anand? Is there a requirement, one? And two, has there been any conversation with the promoters with regards to them looking to infuse more funds into your bank?
At this moment, our capital adequacy is adequate at 17% at a CRAR level, and CET1 are at about 15.8%. So currently, we are very comfortable as far as capital is concerned. So therefore, to that extent, we don't envisage a capital raise in the near to medium term.
It was more from a confidence capital raise point of view, Mr. Anand. We, of course, understand there's no requirement with the kind of capital adequacy you have. It was more from, raising confidence capital, and we understand you've held talks with some sovereign funds.
At this point in time, like I said, there is no fundraise plan on the table at this point in time.
All right. Thank you very much, Mr. Anand, for joining us here today. And we hope to hear more from you in the coming quarters as and when some of those plans materialize. But let's step into a short break for now. Up next, we're going to focus on the bond market with Manisha Gupta.